Hello, Internet Capitalists, to episode 22 of The Big Show. We had a little bit of a hiatus last week due to some travel and sickness, but we are back. As you notice, our background here is very outdoorsy. We are in Bloomington, Indiana. We'll talk about this more later, but the home of the 8-0 Indiana Hoosiers. Lots happened in crypto, though, this week, or these 2 weeks. Seemingly all positive kinds of things. What's your first take before we dive into specific topics?
I don't know, not much. The meta right now in crypto is meme coins once again, which I personally don't find that exciting. Like it gets old to me real fast. Yes, you can make a lot of money if you're grinding in the trenches. I don't deny that, but it's just not that interesting. Like you're sitting on telegrams on Twitter all day looking for the next ticker, and that's kind of what everyone's talking about. So you can only talk about that for so long. So we're going to try to focus on some more substantial developments and hopefully go through a little bit of the Coinbase report that was released this past week, and they have some really good insight into how crypto has really evolved over the last year. So I'm excited to look into that.
Yeah, absolutely. Do we want to start out with a real quick look of the markets?
Yeah, I'll pull it up. You can.
Yeah, I think they've sort of been more or less continue to be sideways. I think Bitcoin just touched on maybe 70K briefly at some point in the past 2 weeks, and we'll look at that real quick. ETH is still just sort of in that 24, 25, 2600 range, trying to break out. Not a lot happening there. But there's some data that suggests that activity has maintained a high level in both Bitcoin and ETH in the Coinbase report that we will talk about.
Yeah, I think prices will be prices. I still think this is one of the things in crypto that's to be seen. It's always a spurious connection between activity and value accruing to your particular coin because fundamentals don't always matter. Activity doesn't even matter half the time. So the market will be the market. And again, it's these macro factors that we've talked about forever. But we are in the upper part of this Bitcoin range. So for people listening, we're at 67,522 US dollars per Bitcoin. And that's in the top of that range, as I mentioned. Let's check in on ETH then. This is the market cap. Oh no, this is price. A little messed up chart here. But ETH is currently sitting at 2,473 United States dollars, and that's not great. But we're still kind of in the same holding zone, so nothing too exciting. I think we got a couple more weeks till the U.S. elections, and that's gonna really inform us on where we go.
Oh wow, 2 weeks max. Okay.
So ETH is sitting at $2,473.63. Still at the bottom of the zone. I still, as a longer term ETH holder, not the happiest with it, but I like the asset still over long time frames. If you're an investor, you're an investor. And a lot of the times on crypto Twitter, you can have people making fun of ETH holders, whatever, if you could outperform by buying some whatever random coin. At the end of the day, know what type of investor you are, what you're willing to hold, what you're willing to not, how active you want to be, and it is what it is. Maybe that's a little bit of cope, but I'm still happy with it overall.
Yeah,
So.
and I think I've got some comments on that later on. Do we want to jump right into? I know you wanted to talk about the meme coins.
Yeah.
Yeah.
So I mean, as I mentioned before, I think sorry, I think my previous comments were included already.
Oh, okay.
I don't think that got cut out. I think we can use it.
Okay, we'll just cut this part.
Okay. Yeah.
All right. Well, that's sort of the typical range we've had for the past 15 shows, I think, somewhere in there. So not a lot happening there. You want to jump into the Coinbase report now?
Yeah, I didn't look at this, so you're gonna have to
Yeah,
tell me
page
where to
5.
go.
Go to the
But
page 5
all right.
in the PDF, and it should be a little bit of talk about. Keep going.
Poly market.
Nope.
No.
Keep going. Keep
Okay.
going. Keep going. Keep going. Keep going. Yeah, the fees right there. So basically, there's a comment here that ETH has regained substantial market share fees on the fee earning L1 blockchains. I was kind of shocked to see it as low as 9%, what essentially was 2 months ago, to rebound as quickly as it did. And I think that sort of corresponds to the removal of negativity in the market. You can see the giant fee on August 5th when everything dumped. things continued down, and now there's certainly a recovery happening. So I think that's good. I think the fees on that are important, and the next slide, which is the next page, Ben, I think shows kind of why that is, and this is a little longer term kind of deal, and that is basically the yield compared to U.S. Treasuries on ETH. So let's see. I guess people sort of compare ETH yield as the risk-free rate of Ethereum ecosystem, and comparing that to the 10-year yield on a U.S. Treasury, which is the risk-free traditional finance security. And over the past, it looks like 2 years, it's more or less stabilized at about double what that rate is. Now, obviously, here shortly or currently, the risk-free rate on the U.S. Treasury is going to be going down, perhaps to kind of 50% of this level. Um, that coupled with the fact that there is some hope that staked ETH will be a ETFable asset,
Mm.
that you could start to see more inflows into that if that becomes um, legal or acceptable or whatever the right word is.
Yeah, I think this is a good thing. This is an interesting characteristic that ETH has, and yeah, it's a good thing. It's a good aspect that the asset has, and a lot of other assets don't necessarily have the same type of thing. Like Bitcoin doesn't have a staking yield, although it does have other characteristics. While Solana does have a staking yield, but that's a little bit farther off, and it doesn't have a ETF already, as you mentioned. So a staking ETF is a little more on the horizon. So a little bit of different dynamics, but I'd say what interests me about the Ethereum staking right here is this idea mostly first is that it is this internet bond. I think that's the most compelling narrative for this kind of part of Ethereum, the asset for more traditional people. And you can understand it kind of as an internet bond. And that's something they can resonate with. And I think that other projects haven't really developed their staking ecosystem to that extent. And Ethereum is the only viable crypto asset. And I think this combination of being a non-sovereign type of currency, a good collateral within its ecosystem, and also having these staking yields is very unique. So that interests me. And yeah, no, I think this is good. I think this being in an ETF product, as you mentioned, will be good as well. And yeah, I like that in general. Coinbase is just putting this out there for everyone to visualize because it's hard to make these things concrete, especially for more traditional folks, unless you can see it on a chart like this. So
Yeah, I mean, this is the classic zero risk chart.
yeah, I
It's
mean,
easy to see.
you do talk to traditional. It's not zero risk, but in the Ethereum ecosystem,
Mm-hmm.
it is. So you can explain it like that, which helps. But yeah, I think it's pretty cool. And the other thing here that comes up, there's been a lot of debates on crypto Twitter and just all around the place. Like, how do you value crypto assets? It's interesting because if you value them based on revenue or activity or this and that, it's very not everyone does that, let's say. So it's mostly like supply and demand dynamics, like commodities mostly is how these things trade. So people are just bidding Sol because they want to go buy meme coins on Solana and they denominate in Sol. So that seems to be like the real reason why the price is being driven up. And things like this are not necessarily priced in. So you have to think whenever like let's say we do institutionalize a bit more over the coming years, they're going to use this as like a key valuation metric for ETH. And then it has these other aspects like the monetary
Yep.
premium. So it's got the bond part, it's got the monetary premium, it's a prime collateral asset. So it's all of these things. And I just
Gotcha.
brought that to mind.
Makes sense. All right. Well, let's go to page 11 now, which is a few down. It's about Bitcoin dominance. Keep going. Here we go. Um, so basically, what this chart it shows is more or less how the assets continue to flow into Bitcoin at the expense of some of the altcoins, and a large part of that is due to the ETFs happening, and just a kind of flight to, if you're going to invest in crypto, well, what's the best known crypto? And that's still Bitcoin. And it's easy to understand, and it's still very strong, very very strong pull. Basically, as strong as it's been in what looks to be about 3 years since 2021. Um, Obviously, that's great for Bitcoin. I think it there's a big part of this that is also investors that have not traditionally been in Bitcoin are now in Bitcoin, certainly since 2021.
It is a little more of that. I would caveat that by saying I did hear like Matt Hogan of Bitwise, I believe, said this, and some other issuers saying that mostly the people buying crypto ETFs right now are crypto investors
Okay.
still. So like the majority isn't institutional traditional folks getting exposure to Bitcoin. Like that may be a small percentage, and I know a couple people that fall into that category actually. But the vast majority is crypto people looking for tax advantage ways to buy more
Mm,
coins. So the good news is that we still have a lot of those inflows potentially to come in the future. So that's good. And yeah, I would say I think Bitcoin this cycle has been Bitcoin dominant for sure, and then it's been Bitcoin and meme coins have
yeah.
been the two big things. So it's kind of a juxtaposition there. You have Bitcoin on the safe end of the crypto asset spectrum, and then you have meme coins on the completely degen, and then everything else in the middle, with a few exceptions of individual tokens at specific times doing well. There hasn't been much sector or even just like categorical wide rally for tokens other than meme coins and Bitcoin, I would
Yeah.
say. So
An interesting chart while you were talking that I thought about that I'd like to see is the one that shows actual number of people who hold each coin.
mm,
Um,
that's a hard metric to
yeah,
gauge though, because centralized exchanges obviously you don't have that
yeah,
information because it's hundreds, thousands of people potentially in a single wallet address for any of these
yeah,
centralized
that's
exchanges.
true.
So it's hard to tell. But yeah, no, the on chain data is interesting. It's interesting too because you look at on chain data, and obviously the people on chain are going to be crypto native. So I think it gives you a good pulse of that. And there's a lot of alpha to be had for crypto narratives over shorter time frames on chain by looking at flows, looking at activity, stuff like that. But I'm not really convinced that that is like the like on a day-to-day level, just seeing what's gaining traction is the best metric for gauging long-term sustainability of any given thing. Like of course revenue and these things are great, but it's these aren't regular people. Just because some app is getting used by crypto
Yeah,
degens doesn't mean that like my siblings are going to go and start
right.
using it.
That's a
So
good point.
yeah.
All right, well, let's move on to the next page, which I found is actually kind of crazy, and which is a chart that essentially shows that the volatility of Bitcoin and ETH, which dominate the market, has trended down fairly significantly, even in this bull cycle over past bull markets, or even bear markets, just past big markets, which I think is generally a good thing. I don't think it's ever going to go to zero. I don't think we want it to go as low as it could be in traditional markets because these are new technologies, but certainly less volatility makes normal folks sleep easier at night about the assets they hold.
Well, it's true. It's the way they teach you how to like. It's interesting to me because there's a couple schools of thought here for investors, but if you're thinking about and learning about quantitative finance, risk is volatility
Yeah.
essentially, which is that never actually made that much sense to me in these like quantitative mathematical pricing models. Of course, it makes sense for certain things, but if you're really a fundamental long-term investor, volatility isn't really an apt measure of risk. It's not existential risk for the company and a stock or the asset. It's just people's perceptions of what it's going to be worth. And you can use that as a proxy for risk, but it's not inherently the risk. So I find that interesting.
So
And
wait, hold on. So that basically what you're saying is risk when measured over 1 month has a very different meaning than that same risk value over 10 years.
exactly,
Yeah.
exactly. This the volatility number that you see for assets is, in my mind, is not very valuable for understanding risk over longer time horizons. It works very well for like these people buying and selling derivatives on crypto assets or stocks. It's a very important input for them to look at. And actually,
Mm,
most of the time, whenever they're buying like options specifically, they're betting on the volatility of these assets rather than the prices of them. And it's important from that perspective. But yeah, over a longer time period, it's like Tesla, let's say. It's one of
yeah.
the most volatile stocks, and it's like people it's because people perceive it's differently at different times. That's the main driver of volatility. But if you fundamentally believe in Elon's companies and like the tailwinds that the
Hmm.
company has, then the short-term perceptions of how people are thinking about it doesn't matter as much. So I just find that interesting as an investor to to
So
see that.
specifically on crypto type stuff, you could say there's a very, very, very infinitely small, low risk of the price of bread doubling tomorrow.
Mm,
And there is a substantial risk of the price of Ether Bitcoin dropping 20% tomorrow.
yeah.
But over 20 years, there is an incredibly high likelihood risk that the price of bread is going to quintuple
Mm,
because of monetary policy.
mm,
And that same low risk on Ether and Bitcoin goes in the opposite direction. It gets smaller and smaller and smaller because those, if you believe that, that they are not correlated, but the opposite of correlated, I
mm.
guess. So that's a good way to look at it.
Yeah, and too, it's interesting. Like, there's a few things you can look at Ethereum, and in terms of viewing risk, not from a quantitative perspective, but from this other perspective we're talking about, more like fundamental and people's perceptions of it, and over the long term, it's Bitcoin would definitely be the lowest because it's like a rock. There's no changes to it. It doesn't have to outcompete any other
Yeah.
L1 on some roadmap. It's just like it's a very simple thesis that you believe in. It's just that people are going to keep wanting to hold Bitcoin because fiat currencies fundamentally lose value over time. That's like all you're betting on. And
The
and
rock analogy is good. That's how you
yeah,
get gold out of
yeah,
a rock.
yeah. It's just a rock.
It just
It's a pet
sits there.
rock. It just sits there.
Yeah.
It doesn't do anything. And it's great because no one can manipulate it. People,
Right.
that's like some skeptics will be like, yeah, it doesn't do anything. It's just rock. Like, yeah, it's great. Like that's amazing. It
Right.
has certain properties that are great. And the same thing could be said for, and that makes me bullish about it over the long term because no one can mess with it, and you have this
Right.
like, yeah, high assurances that it's still going to be there and it's still going to be doing its thing. Similar thing for blockchains, and ETH, in my opinion, has the advantage here. It's an open network. People are just going to keep building on it over time. It doesn't go away. Like, everyone would just have to completely stop caring about it, and it would just have to completely go away, basically, for it to completely die. And in my mind, that's a fairly low probability event just because of the potential I see in it and all the smart people who want to try to build things
Yeah.
on blockchains. So yeah, I don't know. This is what makes a market, different views, and I find that interesting.
Awesome. All right. Well, let's move on to number 16,
All right.
which is this is shocking to me. That basically, keep going. That chart. This chart basically
Mm,
says that crypto is not correlated to anything. It's not correlated to the SPX, which is what, the S&P 500,
yeah.
gold, silver. I don't know what that is. Copper, any of these other things, money supply, or is that what the DXY is?
It's a dollar strength
Yeah,
index.
dollar. It's more or less uncorrelated.
Yeah.
Or I'm sorry, not correlated, not uncorrelated. It's literally not correlated with those things in any strong way. Which is, it's hard to imagine coming up with an asset that is that with all
Yeah.
these things. Now, I guess part of it may be, well, it's just random, and it's that could be part of the answer. But certainly, from a portfolio manager's perspective,
Mm.
if for a year this continues, that's really good for them to like literally diversify their portfolio.
Yeah, I think it's one of the major strengths of crypto and what it can offer to the more traditional types of investors. It's like, hey, look, this is not correlated with any of your assets currently. It
Yeah,
could potentially, people called like, this really annoyed me. We're calling crypto an inflation hedge, and this was potentially a bad name, but it was misconstrued to say like, if month over month inflation this year is up, then Bitcoin should be up as well because
yeah,
inflation is up, and it's like that's not what that means. It's a monetary debasement hedge is the right wording.
yes,
So over time, as fiat currencies are debased, Bitcoin should go up in a long-term bull trend, secular bull trend,
yep,
which it is, and that's what people mean. But this is one of the main value props of it. It is uncorrelated. It depends on your time frame, of course, but that's one reason why crypto is great for sure.
absolutely.
Yeah.
All right, moving on. Let's. All right, that was a lot of like technical economic
Mm.
geek talk there. Let's go to page 19. It's about
All right.
stable coins.
It's a
Um,
good report.
it's a very good report. Highly recommended. And maybe I'll have to retweet this from our Internet Capital account.
Yeah.
But it seems like stable coins are the use case. Stable coins on ETH are the use case. And they're continuing. They've, I think, reached or will reach soon their all time highs that were reached in 2022. Uh, it's an incredible story of these. I mean, this is dead freaking simple. It's a stable coin,
Hmm.
and there's more and more and more need for that online as this shows, and that's a great thing.
Yeah, this goes. The thing that this reminds me of is that something I said earlier is that like crypto's main use cases. This is my opinion of crypto in general. Crypto's main breakthroughs, main use cases were achieved very early on. It
Mm-hmm.
was like Bitcoin and blockchains was number one, and
Yep.
then I'd say programmable blockchains like Ethereum, and then I would say like the first DeFi money Legos like lending markets, AMMs,
Mm-hmm.
DEXs, and stablecoins. And that's basically like those were the big breakthroughs. And now we're all just entertaining ourselves with like Ponzi-nomics, little games, as these technologies take decades to be integrated into the traditional financial system. And stablecoins, as you mentioned, I think are like they're a huge breakthrough use case. There's huge demand there. They're already being used like crypto companies offering like stablecoin transfers and allowing people to get US dollars in countries where they're difficult to
Mm-hmm.
get, is a huge use case already in all these different places. And I think we're only going to see that continue. So,
Yeah.
yeah,
And
it's cool.
actually, you don't have to pull this up, but just quickly to mention it, this week Strike bought
Oh, yeah.
USDC.
They didn't buy you. They bought
The what?
it's a company
Yeah.
called Bridge,
Yeah.
who I actually don't know exactly what they do, but they facilitate like
Yeah.
stablecoin transfers. I
Uh,
think, yeah.
so Stripe is a huge payment processor
Hmm.
company, and they have some plan for this, which I'm guessing is to allow them to manage their assets quicker and easier.
Yeah, because they actually already they have. I was looking at their SDK because I'm building a software product for crypto
Okay.
right now that I'm working on, and I was like, like it would make a lot of sense because it's crypto related to be able to accept payment
Yeah.
in crypto and like ETH and stable coins. And I looked, and Stripe already in their SDK enables this. You can receive USDC and ETH on Ethereum, Polygon, and like Base, I think. So that's pretty cool. And so
Really?
yeah, so I don't know whatever their plans are with this are going to be even more extensive and in depth. So that's very good. And like Stripe is like a legit player. They are a major global company, with long reaches, and they've been really innovating in the real financial world for years now. And
Years.
this is
Yeah.
huge that they have an interest in crypto. And one last thing, you'll notice that I said this to him, the traditional institutions, I think, like the banks specifically and the other infrastructure players who are not direct investors primarily, but are more like
Yep.
infrastructure and settlement exchanges, aren't going to be fast to adopt crypto necessarily, but the fintechs will. The fintechs just sit on top as a UI layer to all this traditional infrastructure. So it's very easy to just incorporate crypto on the back end and
Yep.
then put this into your UI and then bridge all these things. So I think that's where the innovation happens. So you should watch Stripe, you should watch PayPal, you should watch Venmo. You should watch the
What
other.
about, like Visa,
Yeah,
Mastercard?
Visa,
Okay.
Mastercard are included in that, and I think that's going to be a huge area of signal. And the signal we're getting from this is that stablecoins are a big deal. I think we're going to see a proliferation of them, not just in developing countries, but in the United States and other Western developed countries as well over the next 5 to 10 years, as long as we can get legislation passed.
So I'm thinking about this, like on Venmo. I'm right now pretty happy being able to get my money out in
Mm-hmm.
2 days.
Yeah,
But if they integrate USDC, I'll be able to get it out in the time it takes to verify a block
yeah, yeah, and you have like there's other
with no
companies
cost.
doing cards. I guess Visa, Mastercard do it. Yeah, you can spend it directly out of your wallet potentially, which would be really awesome. And then like yeah, you just have a simple UI layer, and instead of being like Venmo, like you just toggle between
Yeah.
like Ben's bank account or like Ben's
Wallet.
crypto wallet. Yeah, and you say you want to send it on the wallet.
Wow.
So
Wow.
I think we're going to see that. I
Yeah.
think we 100% will, and that's like such a better user experience because usually like that's something where you could show people like your friend, your siblings, whatever. Usually they're like, oh, I have to wait however long to get it in my bank account, but now this is this, or I have to pay a fee to do it instantly, and now it's so much easier.
Yeah.
And that's kind of them disrupting themselves as well because they charge a fee on that
Yeah.
instant deposit. So it depends how they're going to charge fees for this, but it's a better UX, I think.
I wonder if you could say, "Hey, Dad, don't send me you. Don't put it in my bank account. You can send me dollars, but you need to deposit them in USDC."
Yeah,
That'd be
probably.
cool.
Yeah.
And they just handle the swap.
Yeah. Yeah,
Huh.
it'll be interesting to see how this plays
Yeah.
out, but hey, it's cool nonetheless. That Stripe acquisition is huge, so very cool.
Awesome.
Stablecoins, big theme. We like stablecoins here.
Yes.
Yep.
All right, let's go. We have two more pages, Ben.
All
I
right.
think this has been pretty interesting so far. They'll go to page 22, which talks about L2s. Yeah, leveling up
Oh,
L2s.
nice.
All right, so
Wow.
this is a chart that talks about the number of daily active addresses in the ecosystem. And essentially, what this shows is from this year how those transactions have just kind of are not quite well, they did reach an all-time high, but the interesting thing to me is that even with the um, drop that you see around August 5th, they've like recovered to maybe I can't 90% ish of their all-time highs instantly. And I don't know what this is, and maybe it's stupid stuff, but certainly uh, it's good when people are using it, and that's what we're seeing here.
Yeah, no, 100%. I think like the idea, people were fighting L2s forever from other ecosystems. So like people were like L2 roadmap's not going to work. So there's two things here. There's one, like it's not going to work, it won't get adoption, people aren't going to use it, and the other like argument would be that like it just isn't good for ETH. And I don't think anymore that you can say it didn't work. Like people are on L2s, people are using L2s. It's really working. Whether or not that's good for ETH is sort of an open question. I personally think it's good because you're expanding ETH's use as a monetary asset and across many different zones, many different
Mm-hmm.
chains. And I think there are problems with this. There's like the fragmentation problem, there's the UX problem, there's all of this, and that's all true. But I think just looking at charts like this, looking at Base's expansion and how much money Coinbase is
Yeah.
making from L2s, and the recent launch of Kraken's L2 this past week
Mm-hmm.
just shows that L2s are they're working, they're interesting to many institutions building in crypto, and they're going to be a primary place where these centralized exchanges like Coinbase and Kraken are going to try to get retail users. And like again, I think people underestimate the power of that. I said from the very beginning, I think the Superchain is going to win
Yep.
because of this close alliance with Coinbase, this close alliance with these core ETH builders, and it has all these connections, and it's a very strong ecosystem. So it's good to see.
Absolutely. The other thing on here that's sort of interesting is, Arbitrum obviously is a power player. They had a great airdrop scheme, but they've maintained relevance, and it looks like even increasing a little recent months since that happened. Obviously, base is exploding and continues to explode. ETH is constant. ETH is like the old grandfather that's always there. It has a certain percentage. But then you start to get to some of these other ones, and like I think that's Linnea, Starknet, ZK Sync, and Zora. Zora's also Superchain. But anyway, three of those: Linnea, Starknet, ZK Sync. Two of them went through the airdrop phase and sort of are fading kind of quickly on there. Blast included in that, and Linnea is coming there soon. And though it's all good, it's all good stuff, but if I were one of those chains, I'd be worried a lot about the big blue monster that's number two continuing to just eat up all of these chains that don't have a real long-term value.
I completely agree. I think like the idea that you can just launch a generalized L2 chain, be like, come build on my chain, that's done. Like you cannot do that and succeed anymore. You need a few things. You need a very clear competitive advantage like Kraken or Coinbase with an exchange that you can integrate into and kind of have these cool functionalities. Or you need like a very clear roadmap and vision for what you're doing. So examples I like from this are Zora, focused on entertainment, focused on NFTs. I really like that. Obviously, Mode. I'm a huge Mode bull. They're doing really cool things. And actually, we can talk about this for a second. So basically, they're doing a couple things. One is they're doing AI-fi. They're really focused on developing projects, focused on the integration of AI agents, bots with DeFi on the chain. And they're attempting to make this the AI hub for the super chain. And I think that's a great strategy. And two, it comes down to the tokens here. So what's interesting is Base doesn't have a token. They said they probably won't have a token. Maybe they won't. Kraken explicitly said whenever they launched this one, they have no plans to have a token. Who knows? But they're still gaining a lot of traction. So the token is not the end all be all. And you see a lot of these projects who issue tokens just lose market share after people dump it and leave. So I think what that means is that we want to see some innovation around the token models if you're going to have a token. Otherwise, it doesn't matter. And that's also something Mode's doing with their vote escrow model. First time it's been done on L2, and you guys should check it out. We're in the process of the first voting round here this week. So we have our VE Mode positions, and we're about to vote. So if anyone wants to bribe us,
we can be bribed.
We can be bribed.
I mean, let's call it like it is.
We can be bribed wherever, whenever. We're listening. Ears open. So yeah, very cool innovation there. And I want to see more L2s innovate with their tokenomics model, because just having this token sitting there, like a criticism of Arbitrum has been they have this token and hypothetically, like you can vote with it, but hypothetically it has claims on revenues from the chain,
Mm-hmm.
but those revenues are really just going to the development team right now.
I
Yeah,
see.
and people have been critical of that, and it's what's really the value of the token. And I think
Yeah.
experimentation there is big.
Yeah.
So yeah, but overall, pretty cool. L2's still doing well. I'm still excited about
Yeah.
them, even if they do get a lot of FUD.
So I should know the answer to this, but I think you do. What Kraken's going to launch a chain?
Yeah,
Are they?
L2 Superchain,
That's what I thought.
Superchain.
So, all right, next thing there. So that what that means is the two largest centralized exchanges in the United States
Yeah,
are going to be part of the Superchain.
yeah, yep.
Now, I'm not convinced that the U.S. should be in charge, like the U.S. government should be in charge of that. But what does excite me a lot is there is a culture of supporting innovation in the U.S. And I think, as you can see on Base, lots of money can easily flow from Coinbase and Kraken to their chains. Now, that's not to say I don't know where this money's from here, but I think that's a good thing. And the other good thing, for those of you outside of the U.S., in the U.S., money talks, bullshit walks, and there's a lot of money behind Coinbase and Kraken that can be brought to bear on government affairs.
Yeah, no, 100%. That I think they did a great job of that and kind of expanding awareness of crypto over like the past year or two going into this election cycle. So at least, obviously, we've seen Trump and the Republican Party like pretty fully embrace crypto, and then the Democrats parts of it become less hostile to the
Yeah.
space, or at least become more informed. And it looks like there's some good things happening there as well. So they've done a great job, and I think that was a big part of Coinbase and other big crypto actors lobbying effectively. And the last thing I'm going to say here is that another reason, and I'm bullish on the super chain now, is that, like you said, like if you imagine like it's a pipe with money flowing into crypto. The pipe from centralized exchanges to crypto is much bigger whenever they have their own like L2,
Yeah.
and it's very easy to do. And why this is bullish for the super chain is that they're really working towards interoperability and shared liquidity across the whole super chain, so it'll be abstracted away.
Yeah.
And what this means is that like if Coinbase can really get their centralized exchange users on chain in a simple way, they could be on chain doing stuff on Zora, on Mode, on
Sonium.
yeah, wherever it is without even knowing. And if you want to look at it from the financial perspective, like they can place bids on your assets just as easy as they're on your on-chain assets, as easy as the ones listed on Coinbase currently. So I think that's good, and I'm really happy to have Kraken and Coinbase on the Superchain team, on Ethereum L2 team.
Yeah.
Yeah.
All right, last slide is the next page, Ben, which is another like incredibly cool slide. It's about overall transaction volume, I believe. It's
the last or the next page. Or the last page?
No. The next page after. Go up. The next page after the one we were on. Yeah, above Bitcoin. I think it's right there. Here we go. Daily transactions. That's it. That's the one. So this is obviously I don't know the size of these transactions, but the high order bit here for me is if you look at this, transactions surged. I'm going to guess sometime around March of this year. And in spite of whatever happened then, they continue on an upward trend that looks to be about double what it was before that surge point. It's sort of like they reached a new plateau and they're not showing any signs overall of going back down. Again, the big blue monster base is leading that, with Arbitrum also very solid, and Ethereum, it's like the same across everywhere. So again, I think that speaks volumes to the utilization of these of ETH and L2s and their future.
Yeah, no, 100%. I think that's very cool, and I'm not saying anything new here, but people like to say this all the time. Whenever you increase effectively the resources available to developers to build new things, they're going to use them. And this is just an example of that with the Dankun upgrade, enabling more transactions on the L2s. You get more transactions on the L2s, and we'll find new things to do. So I think that's reflected here.
Is that when that happened?
Yeah, that's what this is.
Oh, okay.
Here. Yeah.
Oh, yeah. So there's a note there.
Yep.
Yeah. Well, it's always nice when like people do technology and it's like, oh shit, it worked.
Yeah.
I mean, it literally worked.
I still think it's crazy that like people don't give the Ethereum core dev and just blockchain teams generally, but Ethereum because it is so global, so many different stakeholders involved, so many people running nodes. that they can communicate, coordinate, develop the software, and then coordinate the upgrade in real time because it's a blockchain.
Yeah.
It's pretty crazy how they can do that, and kudos to them, kudos to the team. I'm still bullish on Ethereum, on the Ethereum team, on Vitalik. So pretty cool to see.
Yeah, as they say in Pittsburgh about Russ, let him cook.
Yeah, that's true.
Let Vitalik
Let
cook.
Vitalik cook. Yeah, let Vitalik cook.
All right, well, Ben, that was the last page I had highlighted in this report.
Yeah.
I think it's incredible, and we're going to share a link to this because I think everyone needs to look at it. It's all graphs. It's like at a it's at a left curve level,
Yeah.
so we all understand it. Anything else you want to talk about today?
No, I think that was pretty good. I think this was a good format for today.
Yeah.
Give something substantial from Coinbase here, talk about it, and it's really good to have kind of our ideas backed up with these numbers and the things that we've been saying.
Yeah.
And again, I would say the biggest thing, if anyone new to crypto happens to be watching, the one thing I would say is that you can go on crypto Twitter and these places and really get bombarded with information. And unless you know the game you're playing, you're gonna get wrecked. People are saying Ethereum sucks. It's not outperforming whatever. And then you're going to go to try and trade this stuff and you have no idea what you're doing or what your time frame is. You're going to get wrecked. So just if you want to play the meme game, if you want to rotate, if you want to try swapping between coins to catch the narrative, then you can do that. That's completely fine. That's a good way to make money, but just know that you're doing that. Because if not, you're going to have your mind changed by what people are saying who just may have a different opinion, maybe haven't looked at the numbers, you may have vested interests. So just know what your investor style and type is, and then you won't get carried away by all the craziness out there.
Yeah, it's funny you bring that up because one thing that I've learned in the past 9 months that I've been into this heavily is that there are 1,001 people on crypto Twitter that seemingly have made somewhere between $1 million and $10 million, which basically those are mostly lies. But even if there were that many people, the number of people that are sitting in the background and institutions sitting in the background that could squash or put assets in the market that just dwarf those numbers is mind-boggling.
And where are they going to put it?
Right. Where are they going to put it? They're going to put it
That's
on the big yellow granddaddy here, and then it's probably going to go to the big blue granddaddy here.
Yep.
So, understand the motivations of those people on crypto Twitter.
Yep.
And there's something to be said for paid spokesmen. That's fine.
Yep.
That happens in the real world all the time. But also consider if these people have a history of credibility, of dumping on people, things like that. When you talk about or when you decide if you're going to use the information these people bring in. One more thing on that note, on this chart of L2 kind of winners and losers, I think you won't see people with low credibility that have developed chains in the top anymore. Professionals see through the BS and hype that some people shilling their L2s put out there. And, that's maybe not reflected on crypto Twitter and what people talk about, but it's certainly reflected in these macroscopic data points.
Yeah, no, 100% agree with all that. Just watch out of the game you're playing. If you're getting you can make a lot of money on meme coins. It's definitely true, but just know that's what you're doing. I know a game I'm playing, and we talk about it here all the time. What our core theses are, and so.
All right, well, hey, this has been a good episode. Good to be back at it. Barring unforeseen things, we'll be back at it sometime next week again, and want to keep this going. So Internet Capitalists, we'll see you later.
See you guys later. Stay safe.